Hello, my Farmer Money family. Welcome back to another video. Happy Tuesday. Happy return to the work week day, right? From that standpoint, obviously, hopefully everyone had a great Memorial Day weekend, had a nice relaxing Monday as well from that standpoint. We're going to dive right into it. Today, we're going to be talking about Acorns and how they're going public with Pioneer Merger Corps trading around $10 currently, the blank check company. Overall, tremendous promise and growth in Acorns from a investing piece, right? Obviously, I've got two pictures here, one of Alex Rodriguez and the other of Ashton Kutcher, and both of them are heavy investors or part of the investment, group that's backing Acorns amongst many other celebrities. And we're going to dive into that down the road in this video. But very excited. I love Acorns. I love what they have to offer. I love how they've made investing more simple for the everyday user, like, someone, it could be like an elderly person that possibly might not have ever, known how to invest, or even someone who just doesn't have any, realm or cusp of understanding how to invest. It teaches them how to invest. And I think that's really cool, especially for, the younger adults, the younger population. It's so important nowadays more than ever that everyone learn how to invest, learn how to make your money grow. Don't just rely on a salary or being paid by a corporation or, by somebody, right? Make your own money and build that wealth and that portfolio higher and higher from that standpoint. So very excited to talk about Acorns today, guys. Let's jump right in. If you do like this video, please hit the like button and definitely subscribe. Tons more content coming your way. Thank you. The first thing that I love about Acorns is its vision, right? Or its mission statement. And most every company has a mission statement, and I think it's unique. Acorns is building a financial wellness system so that individuals and families will responsibly manage and grow their money over the long term. Acorns has the largest subscription base in consumer financial services and is scaling rapidly with more products and tiers that allow people to grow more money. Awesome vision. So Farmer Money family, take a look at the growth that Acorns has had. Like I said, I graduated school in 2015, right, from pharmacy school. Take a look at how they've grown over that time to 2021, quarter one, 4 million subscribers. And the coolest thing is that they're the largest subscription service currently in financial services. So, if you haven't checked Acorns out, I highly suggest go download it, check it out, play with it, mess around with it, get comfortable with it, because this is going to be one of those apps that is going to be around for the long haul from that standpoint. Acorns plans to serve 10 million subscribers by 2025. Absolutely astounding numbers. That's unreal. So just take a look at the growth. I mean, 2015 where they started to 2021, I mean, just in a short 5 to 6 year span to grow 4 million subscribers, and they keep coming back and they go tell their friends and their family and, other folks. It's phenomenal. So very cool. Farmer Money family, just some figures to look at. So currently, Acorns is serving 4 million everyday American subscribers. The median household income is about 50,000 to 75,000. Very well. And the average age is 34 years old, and it's highly diverse. 60% of these people that are subscribers are first-time investors. And this is what I was talking about, that it's so important to teach our country and teach our citizens on how to invest and how to really make their money grow. Investing shouldn't just be for the top 1% or 2% of this nation. It should be for everybody, right? From that standpoint. So I'm excited to see those kind of numbers. 60% are first-time investors. So cool. And, for those of you that have kids or, young teenagers or, going off to college soon, start talking to them about this stuff, right? Show them these apps, teach them this stuff. 50% are parents is what this data shows. So very cool from that standpoint. Gender wise, the breakdown is obviously male 56%, female 43%. And then it just goes through, the different age groups along with the household income. But just take a look at that map and the state penetration. They are doing such an incredible job of spreading across the United States. And I think that's kind of the big thing that I want you all to focus on, is that they have a presence in all 50 states. So unique. So this is just a quick little, chart and graph on sticky customers getting stickier, right? So basically Acorn's model drives strong, predictable retention, while expansion into premium tiers strengthens it. So overall, take a look at this. their total monthly retention is 98.7%. That is absolutely phenomenal. Like, it's incredible for a loyalty program. This is like the bee's knees, right? In that sense. So, and then take a look at the different tiers. If you're a $1 tier person or subscriber, 73% retention. If you're a $3 tier person, subscriber, 82% retention, and then $5 tier subscriber is an 85% retention. So phenomenal numbers from Acorns overall. Nothing excites me more than the fact that they showed a graph or a chart, right, that showcases over 6 years what that retention looks like. So that stickiness is what they call it, right? Quote unquote, sticky customers, grow the business. The stickiness is sustained. And after the first 12 months, they retain nearly 80% of subscribers for the next 5 years. Guys, that's absolutely incredible. Look at that chart. 72 months, 6 years, 79% retention, basically 80%. I mean, those are incredible numbers. Awesome job, Acorns. Some astounding facts and figures that I'm going to give you guys right now. 222 million US adults with household incomes of under 100,000 are underserved by the financial services industry and represent over $100 billion in potential annual revenue to Acorns today, or in general, right? From that standpoint. So just think that through. 222 million is what they came up with, right? That's crazy. 70% of millennials keep savings in cash rather than investing it. Once again, as I started this video, it is so important that we tell our future generations, our kids, and their friends and whoever else, right? The importance of investing. Savings are great, but if you don't have 200 to 300,000 in your savings account, forget about making any money in interest on it, right? It's squat. I mean, it's like one of my friends who tells me, oh, well, I've got, 30, 40,000 in there. Well, what does that matter? It's pennies that you're earning on it in interest. So very important that you invest your money. 69% of Americans have less than $1,000 in emergency savings. This is a scary number, guys. Imagine if your car broke down and it cost $1,500. That's basically saying that you wouldn't even have enough money to repair your car, right? I mean, that's scary. I mean, you use up the $1,000 it so quickly. You need to make sure that you grow, your investment portfolio, but you also need to keep some savings on the back end, right? Just for a rainy day from that standpoint. 60% of Americans spend more or about equal to their income. Again, a figure that I think we all are aware of. 99% of Americans do not get professional, financial advice. That's scary. And this is why a big part of this channel is to help educate, help show you guys some of the different companies out there, look at, earnings statements, look at earnings reports to really dissect on why someone should be looking at different stocks or why you should buy a stock. The goal of this channel is not just for you to just aimlessly go buy anything and everything I tell you to. That's not the purpose. I do my due diligence on giving you the information, and then you have to take that information and do your own due diligence and invest in whatever you think is appropriate. But from that standpoint, I think that, the Acorns is out there for a reason. It's meant to help you. It's meant to guide you. It's meant to make your money grow. And I think it's just a phenomenal, application platform. And I can't wait for it to go public. So Americans need the Acorns financial wellness system, right? It's a simple automated money manager, easy to add and allocate money. It celebrates growth and milestones. Advice and education is built in. Once again, guys, for those of you out there with teenagers, moms, dads, whoever's watching, if you've got a teenager or a young adult at home, get them into Acorns or have them download this app and just play around with it and just learn as much as they can from that standpoint. They have clear pricing and value, and trust and long-term wellness is key. They make sure to not put your money into risky, plays or, risky portfolios. You're not going to see a ton of your money going into Dogecoin, right? It's just not going to, because they want you to have solid blue chip investments from that standpoint, even if it's a minor piece of it, but it still matters. So let's keep going. The question everybody is probably thinking of: how does Acorns generate revenue today? So they generate revenue off of two different things. One is subscription revenue, monthly subscription fee based on the subscribers to your choice, $1, $3, or $5. High quality recurring revenue with an average lifetime of 6+ years with nearly 99% monthly total subscriber retention on that piece. So phenomenal stuff. Then their non-subscription revenue, which makes up 21% of their entire, pie chart, transactional revenue from debit card interchange fees, brand partnerships, and bank fee negotiations. All our products are designed to help our prescribers grow their money straight from Acorn's mouth. So 79% is based off of subscription revenue, and the other 21% is based off of non-subscription revenue. So that's the entire revenue breakdown. So Farmer Money family, take a look at this bar graph that I've showcased here. Take a look at their subscribers that they are projecting for fiscal year 2023, right? They're looking at a positive, subscriber growth of up to 8.1 million subscribers from that standpoint. Just absolutely phenomenal. I mean, incredible stuff. Their annual average revenue per user by 2023 is supposed to jump up to $42 per user. Absolutely incredible, a 21% increase. The subscriber growth is supposed to be 32% increase, but the fact that the annual average revenue per user, that's what ARPU stands for, is going to jump from, $30, current year 2021 to $42. Awesome stuff. And then the revenue stream, take a look at that. It's supposed to jump from, born in 2021, right? So take a look at that. 112 to 126 million, all the way up to 309 million. And that's a low estimate, according to the CEO as well. But that's still a 63% revenue jump. Absolutely incredible from that standpoint. So again, long-term model target, revenue growth, what Acorns expects to see is about 20% plus. Gross profit, they estimate to see it about 80% plus. And then R&D spend is about 10%. EBITDA which is one of the coolest pieces that I always look at, right? Because that's department gain. That's the health of a company. Can the lights stay on? Can the, equipment keep operational and running? And can we pay our employees and still be, functional? That's supposed to jump up 20% plus over the next 4 to 5 years. Absolutely incredible. And the fact that their gross margin is going to jump up even more is absolutely exciting to me basically as a subscriber and as a stock investor from that standpoint. So, or a retail investor, right? So high margins with, just a tremendous, long-term, model that they've showcased. So let's keep going. So Farmer Money family, Acorns is going to be priced extremely attractively, right? Just take a look at, their enterprise value compared to their subscriber growth in 2020. I mean, they came in around $459. Look at SoFi, eToro, MoneyLion. I mean, from that standpoint, that's absolutely phenomenal. And then the fact that, revenue multiples, I mean, they're only at a 7.7, whereas if you look at Square is at a 16.9, you've got Affirm at 14.4, Afterpay, eToro, SoFi, MoneyLion. So Acorns is extremely attractive in terms of pricing. And I think when it opens on the stock market as well, when it officially changes its name over to Oaks, OAKS, I think we're going to see a nice run up for the stock from that standpoint. I'm excited for it to go, public finally. This is going to be phenomenal. Just take a look at all the celebrities that are endorsing Acorns, right? Dwayne Johnson. He basically had to say, I'm proud to be an Acorns investor and work with the country's leading financial wellness system. Then you've got A-Rod, on there. Ashton Kutcher's been on from the early get-go. And then a little awkward, obviously Jennifer Lopez is on there too, A-Rod, J-Lo situation, but J-Lo's another, big time investor in Acorns on the back end. Disruptive launches, they've done a phenomenal job creating a digital debit card as well from that standpoint. They do have a physical debit card as well. And then unique partnerships, right? They've been featured all over. I mean, CNBC, you name it. I mean, I've seen their ads pop up on Snapchat. I mean, you name it, it's everywhere. Instagram. So they've done a very good job with branding themselves with the younger millennial population and really to drive that educational piece on investing forward from that standpoint. So great job. Kudos to Acorns from that standpoint and their marketing team. Farmer Money family, the last thing I want to talk about before I wrap up this video is Acorn customers have little overlap with other fintech services. So what I mean by that is that only 21% of users that are on Acorns are on the Chase app itself, right? 8% are on Robinhood, 3% on Stash, 3% on Affirm, and then the rest don't matter. But the point is that just because, they're using Acorns, you automatically assume that, well, they've got to be on Robinhood or, Webull or TD Ameritrade or something else. These customers are so loyal, is what it appears to be. And the fact that the brand has such a following that they will not go to anywhere else. I mean, Robinhood, only 8% of overlap with Robinhood in terms of, subscribers being also Robinhood subscribers. I think that's really cool from that standpoint. So, and Robinhood's really popular from that standpoint out there. So I think that shows us that Acorns has a place in the fintech world and its platform is revolutionary and that it will continue this ride to, just massive gains from that standpoint as it moves forward. And I look forward to, seeing where it goes from here. But phenomenal chart that showcases just how much of an overlap it has with other fintech services. And it's basically, zilch from that standpoint, not really much. So very exciting. So Farmer Money family, wrapping up this video, right? Let's talk about business highlights for Acorns. As I mentioned already, it's the largest subscription service in financial services with 4 million everyday American subscribers, sticky engaged subscribers at 1.3% churn per month, which is phenomenal, and then highly visible brand that the customers love. And NPS is in the 93rd percentile, whereas some banks have it around the 15th percentile. So that's awesome. Category creator with differentiated long-term financial wellness positioning. We know that. They have an attractive recurring subscription model operating with 80% plus gross margin on a scalable infrastructure with significant operating leverage because they're not a physical brick and mortar financial institution. They're not a bank, right? It's all tech. And they have a massive, right, consumer wallet and ARPU or average revenue per user expansion potential by delivering a complete money management solution to the largest market in the world, which is the United States. So very excited to see where the stock, once it launches on Wall Street, kind of runs to and goes from that standpoint. But very excited to see Acorns going public, and I hope you all do your own due diligence and come to an understanding about it as well. And share your thoughts in the comment section. If you enjoy this video, please do hit the like button and subscribe. It takes a ton of time to make these videos, and I'd really appreciate all the support. Thank you so much.
If you've enjoyed this video, if you did, please go ahead and hit the like button and please do subscribe. Turn on your notifications as videos are going to continue to pour in as we move forward through 2021. This is going to be the road and journey to wealth and to just massive portfolio returns as we move forward. Thanks, everyone.